All right, let's start today's session now. All set. We are on the 2nd of November. It's our usual Saturday masterclass session. Start of a new month now, and October was particularly brutal to some extent, few days, but predominantly negative throughout the month. So let's take a look at the index, the sectoral indices, and kind of position ourselves for the next week. As I was saying, that this particular last bar of ours on our chart is yesterday's Morath trading, which happened from 6 to 7 and just in 1 hour trade. So whatever decision making we are going to make for the next week from the daily chart, it is prudent, it is advisable that you do not give a lot of importance to the last bar. Try and take the decision from Thursday's bar, because this bar was just 1 hour, right? It was less than 1/6 of what happens in a day. We will keep an eye on it, but it will be very difficult to consider it and give it the same weightage as the previous bars. Weekly should not be a problem. Your weekly chart essentially has 4 full days. So any kind of a scanner that we are going to run on the weekly time frame should be fine. It's just the daily and anything less than daily. So we'll keep that back of our mind. So what do we have from the weekly point of view? In fact, why not monthly, weekly, and daily, right? We have an end of a month, and what we have October is we are looking at a red HAGB on the Nifty futures. This is a sign of consolidation. The consolidation is coming after this one-way upward rally. Our trend indicators, the momentum indicators are pretty much fine. So structurally, the markets are still bullish. Structurally, it's still fairly bullish, no problem. It's just going through a correction. Is it going through just a correction? The first leg of fall has been completely one way without any meaningful bounce back. This particular correction from a high to low basis on the Nifty futures, if I drop an info line, it gives us around 8.5% in 4 weeks. It's lost around 2,300 points. Now, a sign of a strong bullish market is corrections do not last long, corrections do not go deep, and it bounces back very sharp. Whether this particular correction, which is 8.5% so far, is going to be one-legged or multiple-legged, that time will tell us. But what the main thing that worries me particularly, because I track the markets throughout the day, every day, I'm yet to see any significant, meaningful bounce back from the Nifty. Whatever little bounce back it managed was not much in terms of size and in terms of participation. So that worries me. That it seems like even after a close to a 9% correction, the market doesn't seem to be in a hurry to use this discount and start shopping. No. Why? Is it waiting for next week's US election results, which might be a very, nail biter towards the end? I don't know. But looking at the way the IT stocks corrected last week, especially Infosys kind of stocks, TCS has been coming down for quite some time. Is that pack discounting something that's going to come up next week? So maybe. So what we will do is we will also position ourselves accordingly and wait for that event to pass. From a weekly point of view, things are changing. The momentum has changed. The trend has changed. Now, I've said this before, that when the market previously had spent so much time consolidating close to that 22,800, 23,600 zone and all, it will act as a natural gravity kind of a force to pull the prices close to that for the principle of polarity to kick in. This is a very natural phenomenon. If you have looked at charts long enough, you will see that very meaningful supports or resistances tend to attract prices back to those levels. Tends to attract. So do not completely give away the possibility of a 23,500, 26,600. Whether it will come immediately, whether it will come in a staggered manner, or whether it will not even come, that we have to position accordingly. But the things are weak from the weekly chart, the things are weak from the daily chart, clearly. Yes, if these lows are broken, some kind of trap, some kind of a flush out kind of a setup, which I generally like to see, may shape up. As of now, there is no sign of bullishness on the sectoral indices. Level wise, at the current level, as you can see on my charts, I have the fib drawn, which needs to be adjusted a little bit. This is on the, so it's coming to around psychological 24k and maybe down to this 23,600, 23,700, 23,500 zone. This is not a bad zone to expect some support. Whether these levels will act as any kind of support or not, time will tell us. Trend down, momentum down. Structurally, you're in a downward market on the daily and weekly time frame. We do not have any strong signs that it will bounce back as of now. So we stay predominantly bearish. Derivatives trader can look for short opportunities. Cash market long only trader continue to stay on the sidelines and observe. Mid, small cap and CNX 500. If you take a look at the monthly charts, this is the mid cap, which is kind of again given you a red HHGP and trying to consolidate. Momentum has just started to slip. Strong long-term charts for both small cap and mid cap. The extent of the moves, the falls and the rise are steep for the small cap particularly. So you have to time your entry and your exit properly. If you're trading small caps, do not sit on them for long. If you are a churning kind of a short-term portfolio within the small cap stocks. It'll be interesting to take a look at the sectoral indices, starting with the Bank Nifty. Now, as you know, I have these settled separately here. But I'm going to take a look at this time frame for this week, because I want to take a look at the monthly, weekly, daily, especially monthly, weekly together. Over there it will confuse a little bit. So many time frames, so many charts. Starting with the Bank Nifty, much better than the Nifty. Monthly, much better. I have a bit of a divergence kicking in there on the monthly, but the psychological level of 50k is very important for any kind of downside. This tells me, this Bank Nifty chart tells me that if selling continues, if whatever results come in from the US markets, election results, leads to more fall in the overall markets, if anything like that happens, if 50k for the Bank Nifty is compromised, that's not going to be a good sign from I would say another 3 months point of view. If it's compromised and if it closes below that, then my weekly chart will be my monthly chart will be triggering a short signal. That's not going to be a good sign at all, considering we had a breakout, failure, bounce back and follow through. That's the downside analysis. On the upside, I think it will continue to struggle. It has picked up the range, the overall range kind of is expanding. And I think it will stay choppy, volatile, stock selective, earning seasons, right? So that's why you saw something like an Axis Bank doing really good. Kotak continues to struggle. iBank is solid. SBI, I think earnings are coming up. Fed Bank, phenomenal move. It's all kind of IndusInd Bank. It's a completely different story. So this choppiness is going to stay within the Bank Nifty. So you have got to be very, very precise and specific about your stock selection. As a short-term trader, I always suggest, if you see earnings in the next 2-3 days, do not touch that stock. You don't want to trade within the earnings day, unnecessarily getting slippage out of a gap up or a gap down. On an earnings day, if you're eyeing a stock and the earnings is today and the earnings has passed, give it a good 30 to 60 minutes time to stabilize and then take a call, right? So Bank Nifty is going to be a little bit of struggle from the upside. On the downside, things may just smoothly open up for sub 50k. But the best thing about the Bank Nifty chart, the best thing about the CNX Finance chart, and I think to a lot of extent it will get reflected in the private bank. These three charts, the best thing is the overall structure of the chart is brilliant. It's not a chart which is bending down or plateauing out. Still very, very strong. It's just going through, means if you notice very clearly, this is private bank, which will look very similar if I open the Bank Nifty. It's going through occasional corrections. It's not like one way rally, then a bit of correction, another rally, not a very clean uptrend. It's going through a very rough, volatile uptrend. So from short-term trading point of view, view is bullish, particularly bullish, but trade in and out. Do not create a view of a couple of weeks. I don't think so it's going to work here, but it's bullish. Next, auto, the monthly has started to correct and it had a wonderful, this is a wonderful rally. Now this needs a correction, and so this is meaningful. This is understandable, right? Monthly slowing down, weekly downtrend, down momentum, daily heavily downtrend, heavily down momentum. In fact, momentum has just started to improve a little bit. Selling probably will slow down. View bearish, look to sell on a rise, wait for a meaningful bounce back to come, and if the selling stays, then only. You can, those who are in the cash market long only, you can start to consider something like a Tata Motors or a Maruti. Tata Motors, I think I will prefer a little bit more from a short-term, bottom fishing point of view. Keep it on your watch list. But view is bearish. Energy, monthly slowing down. Weekly, again, very similar to the auto. Now, if you follow my work, if you follow these videos and you've been with these sessions, you will remember that we've been talking about this slant divergence on the CNX energy, one of the classic cases. This particular. It's a classic zone where this particular index has been going through a slant divergence for a very, very, very long time. Sir, the slant divergence has gone up, has been there for such a long time. Does this mean that it will lead to a huge correction? Possible. Because it's been slanting and diverging for a very, very long span of time, this much. And this is a weekly chart. So energy not to get too excited about. Monthly is slowing down, weekly downtrend, down momentum, daily has gone through its bit of selling and it's just improving the momentum. Reliance Industries plays a very important role over here. Sector weightage is very high. Keep an eye on OMCs. ONGC, NTPC is showing some strength. So Reliance, again, just like Tata Motors, you can keep on your watch list for a bounce back candidate. Finance, we discussed, banks, finance and private sector banks. View is bullish, selectively bullish. Now the sector which led the fall one way is FMCG. Beautiful monthly chart. Wonderful looking monthly chart. Needs a bit of correction, consolidation. Is going through a bit of correction, consolidation. It's all right. Okay. Do not consider this as a monthly chart. It's just 1 hour. This candle has just 1 hour, right? It was yesterday. Weekly, you can see the steepness of the fall. Trend momentum down. It requires a pullback. It requires a consolidation and then maybe further down. A bit of polarity can be expected here. Can be expected. It's not unfair to say that this zone can act as a bit of support. Let's see if it does or not. It'll be interesting to see if the index makes some kind of a soft landing before a bit of a bounce back. Maybe a 5, 6, 8% kind of a bounce back. Again, Hindustan Unilever, ITC, Tata Consumer Durables fell like really strong, isn't it? Yeah, there you go. So most of them will have very strong monthly charts. coupled with very steep sell-off on their weekly charts. On the daily charts, you have to start observing for some signs of selling slowdown, divergence, consolidation, and you can try and trade the bounce back. FMCG. With FMCG, I'll quickly club in a view on the consumer durables. Consumer durables is more stronger. The sell-off is there, but keep both consumer durables and FMCG on your radar, because these are the two packs, especially FMCG, which have come down really sharp in this particular sell-off, and they are bounce back candidates. So in this sell-off, if you are the kind of a trader who wants to use this 8.5%, 9% correction to start looking for opportunities to trade the bounce back, look at FMCG, look at consumer durables, look at some selective CNX energy stocks. Banks and finance may probably give you a short-term breakout. Selective. I'm talking from a long point of view. Auto, I would say I was saying stay away. Selective, keep an eye on Tata Motors. Okay. IT. Now this was the damage we saw on the last two trading sessions, and a lot of it came from Infosys. Others also participate. TCS has been an underperformer for quite some time. If we go by the charts, the monthly chart is not that bad at all. It's a pretty good looking bullish chart. The weekly chart has just corrected after this consolidation. This was a a descending triangular formation. It took a lot of time to find some support in this zone, as you can see. Then it broke, bounced back, and then it's opening up. Looking at the daily fall, looking at the weekly formation, I sense, the analysis tells me it can come down a little bit more, maybe some more. Will it react too much to the US election results? That we have to keep an eye. But overall, again, if you ask me, my IT view is, from a medium term to long term point of view, is positive. I would be looking to accumulate some stocks once all these events are behind us. So do not go overly bearish on IT right now. If you are in the derivative segment, then you should have already got short signals in Infosys and other stocks. Wipro continues to be relatively stronger, right? The stock was showing fine strength last week, but from a trading point of view, it makes sense to stay light. Do not go over bullish on the IT pack. Metal can be an relatively interesting one. Why? Because it has come down to 9K kind of levels, this CNX metal, from where the last time it managed some bounce backs. If I use this rectangular tool, then it's something like this particular zone. Talking about this. What about the monthly chart? The monthly chart is calling for a consolidation. Trend, momentum strong. It's a second degree sink that we call it in our sessions, in our live classes. And last month's low, which is close to the psychological 9K, it's good. It's really good. Metal 9K, bank Nifty 50K. So all these levels will be very easy to remember back of your mind as we move to November's trade. Same like bank Nifty, but more, I would say, the sell signal can be a little bit more stronger in the metals. Why? Because I see a breakout failure, a pullback, and will it open up again on the downside or not? So predominantly, I will not be looking to trade the bounce back on metals right now. I'll be waiting for the bounce back, this particular bounce back that's happening in front of us, this one, to see whether it sustains. Whether it sustains or not means I would like to see if it goes above 9,600, and who are these stocks? Is it Tata Steel, Hindalco and others? If I see that it doesn't sustain and starts to slip, and then if it comes down to close to 9K, that will be a very interesting level for the CNX metal. So momentum indicators can open up further on the downside. So stay on the sidelines, keep a close watch. If you do any kind of positive trade, long trade, do not sit on it for long. I'm talking from a trading point of view, not investment. So metal, selectively short-term bullish, but if you see a retest of last month's low, bracket 9,000, then this pack can give us a breakdown. Yes, it looks like a double topish behavior. Yes, very much so. And pattern traders in that case can expect significant downsides. There's a possibility. We have to analyze charts and create all the possibilities and prepare for anything. It's not that we have to only look at the chart for bullish charts or bearish charts. Pharma, the best monthly chart by far. No debate whatsoever. The monthly chart is the best. Others like the banks or the auto or IT had some signs of consolidation on a red HEGB. This guy is exceptionally strong. Last time it took some time and consolidated. It gave us a breakdown and made a fool and bounced back. It did give a breakdown. I clearly, categorically remember these weeks. Well, now it's trying to consolidate again on the top. It has given a small move on the downside. Momentum indicators have turned down. Selective. Sun Pharma was volatile. Keep an eye on DVs. Dr. Reddy, Sun Pharma. Selective. But be careful. If you're a short-term trader, trading pharma is not easy. Right? So I would suggest easy to stay away. You have some other sectors and stocks. Why don't you just stay away from the pharma pack? PSU Bank, I think SBI is what matters here the most. SBI has earnings coming up. It has given us a sharp bounce back last week. Pretty steep. Can you see this? SBI has already moved pretty well. I think one of the days, I think it was Tuesday or Wednesday, it was up close to 4% in one day. So all eyes on that particular heavyweight. If we go by the elements, the trend is down. The momentum is improving. Structurally down, but improving. It's been a range expansion for the pack. I will stay away from PSU. I'm not going to touch any PSU stocks next week. Not at all. And finally, reality. Again, a strong monthly chart going through a much needed correction. The sync on the weekly chart is fresh. Trend, momentum is pretty fresh. We've got a pullback on price. And I would say in this case also you can remember something like a 960 for the CNX reality. A breakdown of last to last week's low or monthly low can lead to fresh breakdown for the reality. DLF is the one to keep an eye. Overall reality is relatively much stronger. So from a short side, I think you have a main option for you would be DLF. So to sum it up, the Nifty is structurally negative. We have an event coming up next week. We will see how the market overall reacts and how it plays out. It's been selective. Earnings is also amidst. So earnings-led movements are happening, which are very difficult to predict and trade. We do not like to trade those stocks where earnings are coming up or on earning day. So stay selective. Our bullish eyes are on the banking and financials and within the banking private sectors. Our bearish are, banks, if last month's low is gone. We're looking for weakness. Same goes for IT, same goes for metals. Pharma, we are staying away. Reality, last month's low. DLF can be an interesting one. From a short-term bounce back point of view, keep an eye on consumer durables, keep an eye on FMCG and some selective large caps like Reliance and TCS. Selective, which may lead Nifty to bounce back. If you trade longs, do not, if you're a trader, short-term trader, and if you trade on the long side, be very, very well disciplined and don't sit on the trades for too long. Right? Let's see what's in store for us tomorrow. We'll update next Saturday again. All right, now let's move on everyone and let's take a look at your questions and doubts.